What is up guys, my name is Ignas, welcome back to the channel. This week we compared several dividend paying names from the heavy machinery industry, and with 3 out of the 5 dividend metrics, Caterpillar was considered the winner of that comparison. So I already own the position in my portfolio, we will check on that later on, but yesterday Cat also reported earnings, and that seems to have been a huge beat. So on the 27th they had their third quarter results, beating on both top and bottom lines. Third quarter 2022 sales and revenues increased 21% to $15 billion. Profit for the quarter was $3.87 per share, $3.95 adjusted, and then they also returned $2 billion for the quarter to shareholders through paying dividends and share buybacks. So with the report in, the stock had a sizable surge up, with the price increasing for over $15 per share, up for 7.71% for the day. And the stock was also down for this year, but with the latest move in we are now in the green for the year, higher 2.48% on the year to date. Unfortunately, the surge higher means that ratios are getting a bit worse too, because we are getting a worse dividend yield now at 2.26%. A few months back we already looked into the name, and now I would like to go through a few specifics that I'm still bullish on. An early thumbs up would be greatly appreciated, and with that out of the way, let's start. So our first focus will be the dividend metrics. Caterpillar is now paying $4.80 in dividends, so at a stock price of $212.14 per share, we have a dividend yield of 2.26%. It's not as great as we saw in the beginning of the week, but it's still in line with the sector's average dividend yield, which is currently at 2.36%. Now the dividend payout ratio is at a reasonable 34.81%, so it is still room to improve on it until 50, where then the dividend yield would be closer to 3% at these prices. Now CAD has also been a consistent dividend grower too, currently with 29 years of consecutive dividend increases, so with it growing dividends for over 25 consecutive years, gets it in the list of dividend aristocrats with other solid names too. And if we are concerned with a slowing dividend growth recently, where in 5 years that was up for 7.2% per year, well, we shouldn't be, because over the last 20 years, they managed to keep on increasing on their dividends by 9.62% every year, beating inflation and keeping up with the market returns. Now regarding dividends, I would also like to take a look into my watch list on Google Sheets. So we are in the tab for Caterpillar, and here we have its dividend yield history for each quarter of the last 5 years. Now out of this information we calculate that on average in 5 years the stock was trading at a dividend yield of 2.37%. So there has been 2 times where the stock was trading way under the 5-year average. One was in 2018 at 1.81%, under average for 23.74%, and then another in the second quarter of 2021 at 1.78%. Below average for exactly 25%. But then we also had this opportunity in the second quarter of 2020, with a dividend yield way over 3% at 3.5, almost 50% over the 5-year average plus 47.47%. But even with the recent surge in price, currently the stock is trading at a yield of 2.46%, which is still now a bit over average for 3.65%. So we aren't looking into a huge opportunity at this moment, but at least the dividend is not overvalued, as it has been several times in the last 5 years. Now if you would be interested in doing a similar analysis on another dividend paying name yourself, you are able to access this watchlist by following the second link at the top of the description. Otherwise feel free to add a ticker symbol in a comment below, and I'll consider adding that name into the watchlist myself. Maybe you could share some interesting opportunity available in the market that I'm still missing. So the last time we checked, Superinvestors weren't bullish on Caterpillar, as they have been net sellers of the stock, but 3 months passed, and now we are getting a different picture. Currently 2 funds are holding the stock. Bill and Melinda Gates Foundation Trust is holding more than 7 million shares, valued at $1.3 billion, taking 7.43% of their portfolio. And then Market Asset Management is with a smaller position at almost 300,000 shares, that is valued at around $51 million, and takes 0.73% of their portfolio. So we only have 2 holders of the stock, but different from last time, no one is selling out or decreasing on their positions, and holding on could be even considered bullish. Now, taking insider activity that also improved, in the last 6 months we had one transaction to buy, totaling at a sum of $131,000, and then there was also one order to sell for $590,000. So the values are leaning more towards selling, but at least the number of transactions are equal, and some insiders sees bullishness in the stock too, not something that has been happening often recently. So we did go through fundamentals, but now let's also take the price chart. I've previously had my support and resistance level set, so the former was at around $171 per share, and the latter at exactly $200. So the support worked as a great signal. The stock was trading under it for less than 2 weeks back in September, bottoming at $160 per share, but then there was this rush in the beginning of October, with the highs of 180, relative strength index going to over 50, and the bullish crossover in the lines of the MACD. The price was moving just a bit higher in a few weeks, rolling over the 100-day moving average by the 21st, and reaching the resistance and the 200-day moving average by the 26th. Now earnings pushed the price up again to $212 per share, so way over the resistance and the moving averages. Relative strength index is now in overbought at 76, and the distance between the MACD lines is going further apart. So after looking into it, I don't believe now is the time to get too excited, rather wait a few weeks to consolidate, and I believe we'll likely get better opportunities then. Even though I'm not buying right now, I'm also not selling out as this is a dividend position, and so far it is performing nicely. I bought the stock at an average price of $172.48, and with it now trading at $212.14, I'm up on this position by more than $55, making that an increase of 22.99%. The position now takes 4.53% of my portfolio, and that is 37.59% of exposure in the industrial sector. So the stock is now trading at a dividend yield of 2.46%, but since I did buy it lower, my yield on cost is a bit up now at 2.78%. And from this position I'm getting $6.68 on an annual basis. So what do you think about CAT? Have you been buying into it recently? Share your position on it in a comment below. Also, don't forget to support the channel and leave a thumbs up under the video. Last week I've looked into several other companies, so if you are interested in any of these, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.